Now let's get to the big conversation this morning. Vaibhav Sanghavi with us. He is CEO at ASK Hedge Solutions. Vaibhav, great to have you on the show. Thank you, as always, for joining in. Let's just get your view on the markets and start with that first. Middling along. Neither here, neither there. A lot of hesitancy coming in. What is the one factor required for a decisive move directionally?
See, I think rather than looking for an immediate catalyst, as a one factor which kind of pull the markets either ways, more importantly, I think let's look from last few months perspective when, we had several headwinds, including your tariffs, your geopolitical risks, and to some extent that people were anticipating probably very subdued quarter of earnings as well. Now, as we look now at this point in time, with all respect to all these three events, we are looking at a time when the headwinds, which were earlier anticipated, are now kind of getting out of the way. One, that tariff issue more or less is not having an incremental impact on the market direction. Two, geopolitical risks are done and over with, except for one, Russia, Ukraine, which we might see something come about from there. And lastly, from a quarterly earnings perspective, where people were expecting subdued earnings, I think they have been marginally better than expected. So I guess from a market standpoint, from here onwards, I think when I look forward from a 12 to 15-month perspective, it is a time period when our economy is kind of doing pretty steady, in fact, well. And we can probably see that because of the tax breaks and the loose monetary policy which we have, may probably give some good stimulus or incentive for increased consumption on an overall basis, which means that we may be probably positively surprised on the GDP growth going forward, at least for the next 12 to 24 months.
Vaibhav, a lot of this. Good morning, and it's been a while. Good having you. A lot of disruptions and a lot of positives happening, right? For defense, there is proof of concept because of the conflict, and suddenly this whole space looks like, could there be more export orders? Could there be higher domestic procurement because the government is upping the budget? At the same time, something that we just did all through the day today and yesterday, which is this China rare earth issue that has cropped up and what it could mean, for example, for electric vehicles. So it's almost a binary option in a lot of cases, right? What do you do with some of these? Because these are large buckets in which a lot of investors are invested as well.
No, of course, Neeraj. I think defense have become, one sector to, constantly have a lookout on. And as you rightly mentioned, there's no better proof of concept in that sense. My estimate is probably that, yes, of course, the Indian orders will be there on a continuous basis. But more importantly, I think all the friendly countries who would want to probably lay their hands on these kind of systems for their own defense, I would assume that the order books are going to swell multifold times even from here onwards as well. Now, if that's going to happen, then of course the PE multiples are not going to come down. At the same time, the margin profile, when we see all of these companies across in the last quarter, they have been, way better than expected. So when we now then extrapolate your increased revenue, increased order books on these, then the earnings, will surely surprise on the upside, which means that I think there is a lot more steam on an overall defense play still to come. Of course, on an optical basis, you may see that they've rallied, the P's kind of have expanded, but I think they will continue to remain expensive. And at every dip, this is a sector which will continue to be bought in. So that's the way we look at it. And in addition to that, lastly, as you rightly mentioned about the rare earths, I think it's a developing situation. We don't know where it is going. We will have to assess, how the progress is being made, because there are multiple industries kind of dependent on that. And if the production gets curtailed within those kind of industries, then probably a shorter term earnings impact can happen. But I think, rather than jumping the gun, we will probably wait and see how the, developments happen on especially on this front.
Vaibhav, hi, good morning. Sorry, we spoke as well, but just wanted to know how you're looking at the monetary policy meet and outcome tomorrow. If there is a bonanza of 50 basis points, or if there's 25 basis points, which is largely priced in, do you think that that gives the market the momentum that's required? And what would you hope to see?
See, I think it's not about only this credit policy or monetary policy. I mean, if you see in the last two policies as well, the action has been pretty consistent in terms of first changing the stance from neutral to accommodative, reducing your rates, increasing your liquidity, reducing the risk weights in terms of the unsecured loan pieces. So all in all, I think the policy is going into the right direction of supporting growth on an overall basis. Now, whether they do 25 basis points or 50 basis points, in all probability, it will be any which ways in the right direction of what people are anticipating. Now, whether that kind of has an impact on the underlying sectors, of course, yes, I think banking sector to some extent will get impacted. I mean, of course, the sentiment can be positive, but if you look from an NIM NIM perspective, then there would be some amount of pressure with a subdued credit growth, which has been happening. My sense is basically the earnings can possibly get cut into this segment. So for the banks, it may be negative. For the NBFCs, it may be positive purely because the cost of funding immediately kind of comes down in that sense. So it will be a tricky one to kind of manage, but in the extremely short term. But from medium to long term, I think it is highly supportive of growth. And my sense is basically it will only help over a period of time companies to kind of increase or probably get the momentum of earnings back in the second half of this year.
Would it bring the focus back on spaces like real estate, like autos, which have been also struggling in a in-between sort of state, not really seeing any kind of a breakout or that much of excitement and interest? These need a spur, a consumption spur. Do you think a sizable or at least a clear direction to rate cuts would help here?
See, I would term that, in the combination of what the central government, state governments, from fiscal side, they are doing in terms of welfare expenditure, cutting the tax from an income tax perspective, and from monetary side, monetary policy being accommodative and reducing rates. All in all, it's going to boost consumption for the next 2 years. Now, within the consumption pocket, as you rightly mentioned, whether it flows into autos, whether it flows into other consumer discretionary, I think time will tell. But in my view, I would think that the first line of expenditure probably will happen to experiences in terms of, travel, tourism, spending on food, and so on and so forth. So, and then the next leg probably will to probably durables, and you will find that kind of chain continue. And last being the consumer staples in that sense. Of course, when you talk about real estate, you also have to take notice of that post-COVID. What we had seen is basically a tremendous surge of real estate kind of buying. Now, after 4 years of great growth in that sense, if the industry kind of consolidates at a higher level, I think it's actually a positive sign. Of course, that doesn't mean that the underlying real estate companies might give you extraordinary returns, but it's just that the sector is kind of consolidating at the higher levels, which in itself is a positive side from an economic standpoint.
Now, Vaibhav, you might not be naked long, naked short. You must be doing a lot of hedge strategies as you've always done. I would just love to know, though, if you were doing a pure vanilla long only or a long short without hedges, where is it that you are most constructive on? Where is it that you're most bearish on?
See, what we are most constructive on, at least for the next 12 to 24 months, is the whole consumption sector. As I mentioned, starting from discretionary, flowing onto the staples, led by travel and tourism experiences, food marts, retailers. Those are the segments which we are, very keen on. Apart from that, what we also continue to like is basically the financial services and at some point in time, we may like the IT services as well.
Got it.
So these are sectors which are very, very constructive on.
Just one quick follow-up there, Vaibhav. I mean, IT services, I mean, I just like what somebody said in one of the papers today, that it's the old story of new technology. AI is coming for our jobs. I wonder what IT services do there, but I love the headline. But just one quick follow-up on financials. The overarching thought seems to be that go slightly low on the weightages on banks and up NBFCs because the cost of funding goes down, and that will give a big delta to NBFCs. Would you subscribe to that theory?
Absolutely. And in addition to that, the financial services like an AMCs or capital marketplace. Yeah.
Okay, Vaibhav. Sorry, I know you mentioned this. Maybe I missed it, so sorry for that. But okay, and just if before we wrap up, did you speak about what you are not constructive on, where you might be short?
See, I think I would rather put it non-constructive. My view would be the banks on an overall basis is where I'm not constructive at this point in time. Of course, I'm not saying that it is bearish. We are probably neutralish on that. In addition to the globally exposed sectors, apart from IT, is something which we are currently avoiding, from an overall sectoral standpoint. And lastly, cyclical sectors and where the valuations have been extremely high, that is something also we are avoiding.
Okay, thank you so much, Vaibhav, for speaking with us. Always a pleasure to have you on. Vaibhav Sanghavi, there, CEO of ASK Hedge Solutions, on what the outlook is, and the outlook is largely positive on the street as well.